If your insurance lapses, lender can force place at a much higher cost. So if your insurance lapses or you miss a payment or something, the lender can either make the loan come due or they can find their own insurance that you have to pay.
I've done that on loans.
So it's usually best to work with your broker and make sure you're up to date with everything. Welcome to the Ironclad Underwriting Podcast, where precision meets performance in commercial real estate. I'm your host, Jason Williams, and every week we deep dive into the strategies and systems and stories behind rock-solid underwriting. Whether you're a seasoned analyst, an up-and-coming investor, or a commercial real estate professional looking to sharpen your edge, this show is your front row seat to expert insights, emerging trends, and real-world underwriting tactics that stand the test of time and scrutiny. From market assumptions to debt structuring, cap rates to cash flow, we're cutting through the noise and getting to the numbers that matter. So sharpen your pencils and fire up those models. Let's get to work. This is Ironclad Underwriting. Hey everybody, welcome to this episode of the Ironclad Underwriting Podcast. I'm your host, Jason Williams, and I got my good friend, business partner, co-host, Frank Padlano with us. How are you doing, Frank?
Good, sir.
So last few episodes, we started an insurance sort of mini series, and so we'll continue that this time. The first time we met our insurance broker, JT Lynch. The last episode, we talked about how we underwrite. In this episode, or how we underwrite insurance, in this episode, we'll actually go into the different types of insurance and what lenders require. So, you ready to get started?
Absolutely.
So, and if you remember the episode with JT, everything is going to fall back to get a good, decent broker. They'll help you through everything. They'll help you navigate the waters. But this episode is more just to enlighten you on what is possible out there and not necessarily what you need. But at least it won't be, when you talk to your broker, it won't be the first time you hear it from them. You'll at least have an understanding of what it is. So today I wanted to talk a little bit about what lenders require and why. And I think the first one is flood insurance. Basically, lenders, they want the property insured because if something happens to the property, they want to ensure that they're going to get paid whole again or made whole. If a property is not insured, you will probably lose the loan. The loan will come due.
So let's break it down. Before that, the three major types of general insurance would be property, liability,
and then
excess or umbrella.
An umbrella, yeah.
So I'm just thinking because I'm used to investing in the Wild West sometimes. And when I say the Wild West, I'm talking about like internationally. The hotel that we have, none of our competitors are paying for insurance. We're happily paying for insurance because the more assets you have, the more you want to protect them.
Then that brings up another question. Internationally, even if you have insurance, will that insurance company pay out if something happens?
There's definitely different companies out there, but I'm not worried about that. I mean, the day before the hurricane came through 2 years ago, I got a phone call and said, "Don't worry, Mr. Padalano, you're insured." And I said, "For what?" And they said, "You don't know there's a hurricane coming?" And luckily, we didn't have to use it. We were very lucky, but just the whole concept.
So internationally, if you're in a hurricane in your hotel, do you have to have flood insurance also?
So I don't know enough about the flood insurance there. Like I said, our competitors have almost nothing, but my general concern is that besides the property is the liability. The liability is the biggest concern for me. You know, somebody's comes back to the hotel at 2 a.m. drunk, and if they fall off the side of the building, you know, that's a problem, you know? So,
yeah. I mean, yeah, that could potentially be a problem, but not necessarily your problem. You might have to go to court. I would be more of if something happened, like a railing broke and the guy fell off it, he wasn't sober or something, or he wasn't drunk. and the railing just broke and he fell, that would be where I would think your liability would come into play. But again, I'm not an insurance agent, broker, or anything. I'm just
Yeah, I
speculating
mean,
right
there's
now.
standard braking, and then there's, you can push it really hard and be crazy.
Yeah.
Do
There,
handstands on it.
there's negligence. Who's negligent? Is it the owner? Is it the victim? There's all sorts of things that come into play. Um, but property would be if the railing broke and it costs 100K to fix, you would pay maybe your $15,000 deductible and get it fixed that way. A liability would be the guy falls and breaks an arm, your liability would cover his medical bills maybe. And then your umbrella would be, all right, now he's suing you for beyond what his or whatever your liability is, because his medical maybe was 200,000 and you only covered up to 100. So he might sue you for the other 100, and that's where your umbrella comes in.
So those are the
That's
three main ones. And
Yep.
then the next one we're talking about is flood insurance.
Yep. And flood insurance, and when we talk with JT, that should only be required if you have like an external, like nature or something coming in and flooding. It shouldn't be required if you have a pipe burst in your house. I have heard that it did. Um, that might have been a different time. Laws have changed, so it might not be an issue anymore. But really, what I heard way back then was if you have any water damage in your house, that's when flood insurance comes into play, whether it's a pipe burst or a levee breaks or a flood or whatever. So, but go
Of
on.
flood insurance, what makes the prices different? I'm sure you know a little bit about that.
Flood insurance will be dictated by whatever flood zone you're in. If you're in I don't know what all the flood zones are called. I know there's like 100-year flood zone. There's a 500-year flood zone, and so those typically will be less for flood insurance because there's a less likely chance of it flooding. But if you are like right next to a river and the river knows is known to flood often, then your insurance will be through the roof because there's a higher chance of them paying out. And insurance is all just a probability game. What's the probability of them paying out? And so that's what the premiums are based on. The higher probability of a payout, the higher the premiums.
Jason, I don't
Go
know if you
on.
remember, a year and a half ago, I looked at an auction of a property in Rhode Island, and you were possibly going to be investing in it. It was a pair of 12 units, and it was a flooded area. So one of the buildings, the first floor was completely gutted, and you could probably not put people in that maybe ever again, unless they fix the drainage issues around the property.
Yeah. Now I remember that property. Um, and there's also in Wichita Falls, there's a hotel right across from the falls in Wichita Falls. I did the air quotes around falls, and that property. When I first moved here in 2007, we had a big flood, and it flooded like the whole first, maybe even the second floor of that hotel, and then it shut down. And nobody ever fixed it up. It just kind of just sat there empty. And then a few years later, we had another big flood, and it flooded it again. And I'm guessing they didn't have flood insurance or something because it just sat there. And now they eventually just tore it down. But driving on the highway, you can see it, and you can see the water up to like the second story window. So it's kind of weird, kind of disheartening knowing that it was never built back up. But it was also not necessarily in a flood zone. But we had two 100-year floods within 5 years of each other, and that was what did it. So
Yeah, and flood insurance get pretty expensive because basically it's all about insurance, and if it floods all the time, we know how much a cleanup can cost.
yeah, and like what JT was saying is you only really have to insure the bottom floor for a flood because that's usually what gets flooded. So if you have a flood and you're like in a high rise and you're on the 27th floor and you have flood damage up to there, then that's Where's Noah? Because I think there's a second coming or something. I don't know, but that's a pretty bad flood. So
Yeah, one last thing I'll talk about flooding is I remember in South Carolina in the Charleston area when they changed the laws and made it tougher to build any new construction now in Charleston. I could be wrong. In certain flood zones, you're not allowed to build anything on the first floor. So the first floor can be like parking, maybe storage, and that's about it. And you see a lot of the homes on the second floor is the
yeah.
first floor of people living.
So when you go down to Galveston, you drive along the coast. There's a lot of houses out there, but they're all on stilts.
Yep.
So they're on stilts, and the car parks like underneath the house because I mean you still have to drive, but everything is like nothing can really be damaged because it's high enough up. Whenever the road or whenever the ocean comes in, so. Let's see. Oh, there are some flood zones. There's like FEMA zones where it's mandatory and federally backed. Mandatory for federally backed loans. If you're in a FEMA flood zone, you have to have flood insurance.
In certain ones, yeah.
Yeah. So full insurance stack for multifamily. Property we covered. General liability we talked about. Umbrella and excess talked about. Loss of rent, business interruption. So
So the loss of rent one, I see as what I consider a newer one. I don't think they were
do
writing that much 10 years ago, but I definitely see it a lot more and more every year lately.
you think we
I could be
see it
wrong.
more now due to COVID when people weren't able to work and therefore weren't able to pay rents and either were evicted or just living there rent free because insurance was covering the rents
That's
or
a good question. Maybe it is COVID related. I'm not sure.
but I have heard before that of insurance for like small businesses and stuff have like business interruption insurance. So maybe if a car like drives through your big old window or something and you have to close up shop for 2 weeks because you're trying to get it fixed, then your insurance would cover your business interruption for those 2 weeks or whatever. So I have heard of that, and I never really thought about it for multifamily, but I guess it is there. So um, boiler machinery equipment breakdown, another type of insurance that we don't have. But it's almost like your homeowner's warranty or whatever. If your furnace goes out, your warranty will cover it. But this is for major industrial equipment or boilers and chillers and stuff like that. So elevators, if you have elevators. In Texas, we have stairs. Usually only go up maybe 4 floors, 5 floors tops. I guess up
Well,
in
you guys are
New
more spread
England,
out. So.
You have elevators because they go up higher.
Oh, stop it. I've been in elevators in Texas. I've been in elevators in Wichita Falls, but I agree overall. I'm just playing with you.
Have you been in an elevator in a multifamily apartment
No, not in a
complex
multifamily in
in
Texas. No,
Texas?
but I
I
was
have not
thinking,
either.
I was thinking about like the offices and downtown spots.
Yeah, I was thinking more for multifamily. Yes, we have elevators in Texas.
That's what I was
No,
playing with. That's why I thought it was funny when you
no,
said that.
we don't typically have elevators in our apartment complexes in Texas, or not that I have seen. There might be some in Dallas where space is confined, or they
Yeah.
convert a loft. Maybe where they converted the lofts downtown, they might have done
Yeah.
that.
Conversions I can see more. So for example, I mean, I have that property in West Virginia that was a former hotel. There's two elevators in there. There's a regular size elevator and a service elevator.
Yeah. And workers' comp. Um, this is typically carried, I think, by your management company, because your management company is basically its own business, and so if an employee gets hurt on the job, their insurance will cover it. But ultimately, it's going to be an expense that the owner pays for, just because when a management company incurs an expense, they just pass it on to the owner. So that's like an indirect insurance for the owner, I guess. And if you're wanting to start your own property management company, you're going to have that as well.
Definitely.
Um, so what do lenders typically require in terms of replacement costs? They want the replacement cost coverage or they want cash value. Typically, they want to be made whole. They don't want, if an old dilapidated staircase breaks and it basically due to depreciation and everything, they determine its value to be $50, but it's going to be 130 to replace it. They want the replacement and not the actual value of the
Yeah, so
dilapidated
replacement
wood.
cost is paying for something brand new of similar condition. And actual cash value is that if you have an older thing inside your building and it dies, they don't give you the full replacement costs. They only give you what they think it was worth when it died,
Yeah.
which is like a
So
what the point sometimes on some things.
yeah, I think that, and I think more people would typically see that with like auto insurance. So
Yeah, I can see that. The 2002 Corolla or something.
yeah, yeah, it was 20,000 when you bought it, and it's 2,000 now. So, um, lender must be named as the mortgagee and loss payee. So if something happens, the lender wants to get paid. The carrier
I
must meet
mean,
the
I've been a private money lender myself. I want to be on the insurance.
yeah. Everyone, it's insurance is there to secure your own investment and secure your own money. So, carrier must meet minimum AM best rating. So the insurance company basically must be reputable, and they must pay out when they're supposed to pay out. And if you don't know if your insurance company does that before you get with them, that's when you need to work with your broker and get your broker to find a reputable company. They do have their rating system. I don't really know what it is, but you have to meet certain ratings. Deductible caps. Agency lenders, Fannie and Freddie, often require an AOP deductible. Not entirely sure what that is, but sometimes if they see the deductible is too high, they'll make you buy it down. Um, we've had that
Okay.
option here in Texas. We have like a $250,000 deductible for wind and hail, but we could have bought it down to 100K if we put in a significant amount of money into it. So, and I think when you do that, you're really asking for an insurance claim just so you can recoup some of that money you had to buy it down with. Because otherwise, it's just like insurance is the thing that you buy and you hope you never have to use, you know? So,
Especially life insurance.
yeah. If your insurance lapses, lender can force place at a much higher cost. So if your insurance lapses or you miss a payment or something, the lender can either make the loan come due or they can find their own insurance that you have to pay.
I've done that on loans.
So it's usually best to work with your broker and make sure you're up to date with everything. And then there's also a co-insurance requirement. Sometimes lenders want 100% replacement cost. So there you go. Seems like they would want whatever their LTV is. So if they have 70% LTV, they'd at least want 70% of the value, but I guess they want 100% sometimes too. So
Yeah, and obviously you're insuring the land, but you're not. If you think about the value of an entire property, the land is going to be different than the buildings. You know.
yeah, yeah. And there are things that do affect your insurance premiums and your liability, playgrounds, pools, things like that, basketball courts, all of those can affect your insurance. But generally speaking, pools and playgrounds are net positive. So don't forego it just to save a little bit on the insurance premium. That's what my mentor told me, and so that's what I tell my students as well. And my mentor has almost $3 billion in assets under management, so he knows what he's doing. Um, oh yes, market also has an impact on insurance. If you are investing in an aggressive litigation state like New York, parts of Florida, New Jersey, you are going to have higher insurance premiums because people are going to be happy to sue you, and so that means you're having to spend time in the courts, lawyers, all of the above, and that comes out of somebody's pocket. So whose pocket's going to come out of? Crime exposure. Higher crime areas may require different or higher coverage. And I don't want to scare people into or away from insurance. Insurance is needed. Insurance is a whole lot easier than, like I said, this stuff you don't have to do. Your broker will know if you need it or not. Your broker's going to tour the property. They're going to pull all the market analysis, the crime analysis, everything. They're going to know what state it's in. And so really, if you recall, I think it was in the last episode, all you have to do is email an OM, a rent roll, and a T12 to your broker and look at numbers back to you that you can use. And they take care of everything else. They'll check to make sure it's not in a flood zone. They'll make sure that they'll pull insurance that most lenders are going to be happy with. Yeah, we have had lenders come with us and make demands on insurance. And so we send those to our broker, and the broker sends them to the insurance and says, yes, these are covered. No, these aren't covered. We can cover them. It's going to be a little bit more of a premium. And that's that. You don't have to like jump through too many hoops. So that's pretty much it. I don't know if you have anything else.
Yeah. When you talk about a liability exposure that underwriters miss, I'm thinking of some of the little things like some tenants put things in their yards or out in the common spaces that should not be there. So I was thinking like a trampoline. Even if it's a small one and you're not paying attention to the property, or your on-site doesn't really give a hard time about it. When you think about the highest claim rate in multifamily and in business properties, slip and fall is probably number one. A big one though, I know that on personal houses, even like single family homes and small multis, that trampoline out there, kids are going to get hurt on trampolines. It's standard. I remember one year as a teacher, I had two different kids that broke their ankle or had a cast, their elbow or their arm because of trampolines in the same year. If there's a pool, you have a higher risk of death. But like you said, I agree, pools are still a necessary component of most multifamilies, especially in the South. But what I'm talking about is just the concept of having that trampoline out there that is not protected anyway, not being watched or anything else. There's a high chance that someone's going to get hurt.
Yeah. And also, I remember when I was in college living in an apartment complex, I could have a grill if I wanted to, but for me to use it, I had to be like a certain number of feet away from the building to be able to. And a lot of times you might see grills and breezeways and stuff like that just sitting outside that might be chained down or something. And you need to check with your insurance to make sure residents can, one, do that, or if they do need to move it away from a building or further away. Because typically a breezeway is like sort of an opening in the building, but it's still part of the building. It's like a hallway, an outside hallway through the building. So, oh, and also when underwriting, I typically don't line item everything. I don't say, all right, this is how much umbrella is, this is how much liability is, this is how much property is, this is how much flood is. Yeah, I might get 2 or 3 invoices from insurance, but generally I just lump them into a single one called insurance. But if you do need to get that granular, you can. If your model doesn't account for it, you can look me up. I can help you with that. I can walk you through how to do it. But insurance does not need to be as hard as it seems. So, anything else?
That's all I got.
On what lenders may require? Well, yeah, that was this episode. We'll continue on with our insurance mini series next episode, and we'll catch you next time. Bye. And that's a wrap for this episode of the Ironclad Underwriting Podcast. If you got value from today's conversation, make sure to subscribe, rate, and share the show. And don't forget to connect with us on LinkedIn, YouTube, Facebook, Instagram, or check us out at our website at ironcladunderwriting.com for more insights and updates. If you have a question, a deal you're analyzing, or a topic you want us to tackle, shoot us a message. We'd love to hear from you. Until next time, keep your assumptions grounded, your models sharp, and your underwriting ironclad.